Hello guys, it's your boy once more. Welcome to Desi FX. Today I'll be talking about some common mistakes traders make in the market, some of which I did myself when I started off. I wish someone could have told me back then what I know now and what I'm about sharing with you. That way my journey to where I am right now would have been easier. But that notwithstanding, I'm here for you to share my experience so you don't get to do the same things I did that slowed my growth process. So why don't you sit back, you relax, and pay close attention to what I'm about to share with you. If you're new on this channel, please hit the subscribe button so you don't miss out on new content. Forex trading can be compared to life as we know it. When we are born, we start by crawling, then we learn how to walk, from where we can then start running. But unlike life, most newbies in forex trading often want to start by running without even knowing how to crawl and end up being crippled for life. If you're just starting out or trying to find your way around, then this video is absolutely for you. And even if you are an expert trader, you may still find a thing or two that will be worth your while. I don't think there is anyone who has walked in this life without actually crawling. But in trading, you find people who want to run to the ends of the world without even knowing the first thing about trades. This always often ends in tears. The first common mistake, especially the newbies, they always make is failing to prepare a trading plan. This is so obvious, as many pro traders will tell you. As a new trader, you should be able to establish a plan clearly indicating the types of pair you'll be trading, knowing your risk to reward ratio, which days of the week you will trade for day traders, knowing when to enter and exit the market. There are so many other things you can include in your trading plan, and you should be disciplined enough to stick to it. Trading is not different from other businesses you plan for, and if you actually take out time to make a plan and stick to it, then you are on your way to massive success. Otherwise, you're just preparing to fail. A trading plan is a must-have and the very first thing any would-be or existing trader should have, but yet many always take it for granted and go about trading the market. The second mistake most new traders make is overtrading. Most new traders, out of excitement, often tend to overtrade the market, especially for the wrong reasons. You find someone starting off with an account size of, let's say, $100 and believes he or she can turn that into like $10,000 in a few weeks or less. What causes this most of the time is the fact that most people start trading for the wrong reasons. Some often confuse Forex market for a get-rich-quick scheme, and for that reason, they start trading with bigger lot sizes than they can manage and end up blowing up their accounts. No matter what you do in Forex, you should have a strategy, trade according to your means. The third mistake traders often make is revenge trading. Revenge trading is done by traders who have lost positions they saw to be deal breakers, and the problem with such trades is when you see them, you believe it is your holy grail and you want to make as much as you can. So when it goes against you and you can't bear it, the only other option is to jump right back in now, and instead of trading with logic, you let emotions take control and you start following the market, which is very wrong. So my advice is, no matter how certain you are of your strategy, always stick to your trading plan and follow your risk management, taking it slow. Never risk more than 2% of your trading capital in a single trade, guys. It is the wrong thing to do. The fourth mistake most traders make is FOMO. FOMO stands for the fear of missing out. This is one of the things that causes most new traders to lose their accounts within the first few weeks or months. Some even blow it up in a day. The truth is, as a new trader, you should be watchful with your emotions. Try as much as you can to suppress emotional thoughts and be logical in your thinking. You see a trader with a very good setup but without a trading plan, and because you lack a plan and you do not know when to enter the market, you'd always wait for it to make a move for you to call your shot. And this is just an aspect of you following the market wherever it goes. If it's going up, you're going up. If it's going down, you're going down. So you wait for the market to make a move so you can dive in. And the moment this happens, you get inside the market. And instead of the market to go with the direction you have chosen, it now turns against you and it's going the opposite way. At that point, any logical person would want to dive out or maybe wait it out. After all, there would always be other opportunities, other trades you can take. But a desperate newbie who wants to get rich doesn't see it this way. You always think maybe if this opportunity goes, you would never get another one again, and that's not the case. That's not the case. When the market reverses against you, it takes you out. And if you're trading with bigger lot size, not putting a stop loss and things like that, it blows your account. And for what reason? Guys, it's often said that Rome was not built in a day. And it's just the same way with your trading. You would not make all the money you want in a single day. The key here is to take it slow. Know what you're doing. Develop a plan. Create your strategies. And don't overtrade excessively. Just chill out and take it slow, guys. You would not get rich in a single day. You won't. The fifth mistake I'll be talking about is excessively looking at the chart. Most new traders often find it difficult to look away from the chart, especially after placing a trade. Maybe it's because you did not put like a stop loss, which is a very wrong thing to do. I've always told you guys to practice your risk management. No matter what, always practice your risk management, not risking more than 2% per trade. It's a very risky thing to do, and if you must trade without a stop loss, then you should have the stomach for it, for when it goes against you. Another reason why people always look at the chart excessively is a lack of confidence. Like you don't believe in your strategy, you don't believe in yourself, and so when you put a trade, you just want to make the least from it. Like you just want to make money, you're just excited to make money, and the moment you feel like you've had it to your fill, you take what you can and you exit the market. And if you keep trading like that, you would never go anywhere, because you realize that you make money, yeah, but for the moments when the market actually goes against you, you would make maybe twice the amount you made as loss. And that is not a good way to start off as a new forex trader. Let's take, for example, a day trader who is starting off. You've taken a long position and the market is actually bullish, but because you are just looking at the chart every now and then, you're not so sure of yourself and the market is actually going up. But now, maybe because of the lack of confidence, you now go to start looking at the chart, going down the time frames from 4 hours to 1 hour and maybe 15 minutes or even 5 minutes. And in the course of doing this, you spot a reversal on the 5 minutes chart, for instance. Normally the market doesn't just go in one direction. There is always like pullback and then continuation of the trend. But because you have spotted this reversal and because you lack confidence in yourself, you assume that this reversal is just like the break in the market structure and now it's going down. It's no longer going towards your direction. So what do? You exit the market. You take a profit, of course, but a smaller profit than what you would have gotten if it had gotten all the way to your take profit margin. So you exit the market, and then a few minutes later you take another look at the chart and now it's actually still going up. So maybe you tell yourself, okay, fine, now you try as much as you can to be patient. So you wait it out to get all the way to your take profit at the top. But the problem with this is you're already being emotional. you're not even thinking logically anymore. It is your emotions taking control of you. And so now you get inside the market again for the second time, hoping to make something small and exit. But now when you enter the market, what happens? It reverses totally and it starts giving you losses. And now instead of you to exit the market, you think, okay, no, it's going to reverse, it's going back up. You keep telling yourself that it's going back up, it's going back up. And that's how the losses keeps accumulating. And before you know it, you're down with nothing at all. You know, guys, Forex is not a game, and it's not a get rich quick scheme as well. If you have to be a successful trader, you need to take it slow. You need to learn, develop your strategies, and you back test them before implementing, and avoid gambling with the market. There are several other mistakes that traders actually do make in this business, and if you've experienced any which is different from those that I have mentioned here, kindly share in the comment section so others can learn from you. I hope maybe from what I have shared with you today, you would have taken a point or two to help you in your trading life. So with that, I've come to the end of this video. If you have any questions, kindly drop them in the comment section and I'll get to you as soon as I can. Thanks for watching, guys. If you like this, kindly hit the like button. Do share it also with others so we can do this together. Don't forget to hit the subscribe button, guys. It helps the video to get to many more people. I wish you a happy trading life, and it's your boy signing out. Peace.